Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Friday, March 17th. Happy St. Patty's Day. I am coming to you with the big show. Anytime I deviate from my opening, I mess it up. Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Friday, March 17th. 4:57 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with the big show, the St. Patrick's Day Big Show edition of the Revere Market Insight video, where we take a look back at the prior week, take a look ahead at next week, and update the world famous 21 over 21 leaders list. What a quality video this is going to be. State of the market. We are in a correction. However, tech continues to rally. You can see over here on the trend gauge. Always trying to adapt the trend gauge to really what's going on in the market. And I've been talking all week about how the strength of the NASDAQ 100 versus the action of the rest of the indexes is, I don't remember seeing. It's such an opposite, bifurcated, bipolar situation. So market leaders, we're neutral here. Some turnover, but for the most part, they're holding up pretty well. The market seems to be holding a bunch of stocks back. Short term, 4 of the 5 under the 21-day moving average, the exception being the NASDAQ 100, which is in a class by itself and continues to stay above all moving averages and form a very nice tight flat base. Medium term, 4 of the 5 below the 50-day moving average, again the same exception, NASDAQ 100. And long term, S&P 500 couldn't hold that key 3940 level that I talked about in yesterday's video. So neutral, back to the red arrow here. Of course, the NASDAQ 100 bucking that trend also. So what happened today? Banking fears intact. Any semblance of calm that might have been trickling into the market over 11 big banks depositing $30 billion into FRC. Well, FRC was down 33% today, so that didn't exactly spark a bunch of confidence in the financial system. So banking fares very clearly still intact. In fact, closing at the lows of the week on the banking indexes, and really most banks closing at the lows of the week. And the S&P 500 could not hold the 200-day moving average. Final numbers for today: G6 down 1.7%, S&P 500 down 1.1%, NASDAQ 100 down, but a very reasonable pullback relative to what it did this week, down 0.5%, Dow down 1.2%. Mid caps and small caps continue to get hammered, mostly by the financials and oils. Throw in some basic materials and some industrials in there also, down 2.3 and 2.7% respectively. Global diversified 60/40 down 0.37%, really saved by BNDW, the World Bond Index, up 0.7% as the flight to quality continues. People buying bonds hand over fist based on what's going on in the banking system. In-house GROTECTION down 0.45%. We'll update the tail of the tape and the 21 over 21 list. So let's get right into it. We'll start off with the S&P 500. As we always do, you can see here the close back above the 200-day yesterday. That's the big black line. That's where all of these occur. And that's all I'm going to say about that, because by now you know the spiel. Risk is real in the market if we can't make significant progress above, or for that matter, even stay above the 200-day moving average, and add banking fears on top of that and a Fed rate decision next week. And you can certainly understand what's going on. This declining 21-day moving average also seems to be in control. We bumped into that yesterday and denied on it again today. So one day above the 200, next day right back below. So 1, 2, 3, 4, 5, 6 of the last 7 days below the 200-day moving average. Let's contrast that with the undisputed champ NASDAQ 100. 4 beautiful days up off the low, made a higher high today and then backed off as it just couldn't overcome the banking pulling down the indexes, but look at that relative strength line. Don't really see too many index relative strength lines pointing up at 2 o'clock. Uh, and look at this nice tight flat base that's forming. 29 days, so 6 weeks, 9%. Uh, that's pretty sweet, as is the stochastic. Let's go to the Dow Jones Industrial Average. Again, below the 200-day moving average, ran into the declining 80 MA today. Let's flip to mid caps. Below the 200, closing at the lows for the week. IWM small caps also closing at the lows for the week, well below the 200-day moving average. Let's go to the dollar. Really not, we're watching it, but it doesn't seem to be playing much of a role, and it continues to drift lower. Uh, Normally, the US dollar is a flight to quality, a flight to safety in times of crises, but not over the last 2 days, although it was up Monday and Tuesday. Did close slightly down for the week. Let's go to the VIX. VIX with another pop higher today, for kind of forming this 6-day base above 23 and below 30, back above the 200-day moving average. The trend for this is up while we base. Let's flip to bonds, BND. The broad bond index up 0.72, really kind of in a tight range all week. The top of the recent range, the 5-week range, certainly, as bond prices up mean bond yields down as people continue to flood into buying bonds. TLT up 1.5%. Junk bonds down today as these move like stocks. LQD corporate bonds up today into their 50 and 200-day moving average. Let's flip to the yields. The 10-year yield continues to fall. Again, flight to safety on this. Normally, we'd be rejoicing this, but the Fed is still expected to raise rates by a quarter basis point next Wednesday at the FOMC announcement, but closing at the lows of the week on yields. Again, this is a fear trade. And the 30-year also closing at the lows for the week. Didn't make lows for the week, but closed at the lows for the week. Let's flip to where some real strength is starting to lie. Gold breaking out of a really nice, look at this weekly cup and handle here, and it's a stage one as it broke below this base here. Actually, this is looking like it's a cup base, and then the handle was long enough to be a base by itself. So you could argue it's a one long cup and handle or a base on base. Either way, breaking out, and look at the volume this week, and we took a position in this today. GDX, let's go to gold stocks. Also acting well, not breaking out, but you can see they're forming a very similar handle to what GLD is doing. Silver SLV on a tear also this week with what's going on in the banking system, and Bitcoin. Hip, 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 hooray, up 7.82%, making highs going all the way back to, May of last year. So the champs of fiat money are going to do a victory dance this weekend. Okay, so those are the major indexes that we track. Let's go to the tail of the tape. Correction with the tech rally. I need to update the AAII numbers. I didn't get them this week. 25 on the fear and greed index. We're hanging on the bear case now. That 39.28 level, we closed back below it today after closing above it yesterday. That news about the 11 big banks that I mentioned, that didn't do anything, down 33%. Some more news. Yellen was asked about guaranteeing all deposits, and she said only structurally important or systematically important banks would get a deposit guarantee. How do you think that's going to make the depositors on all of these regional and small banks feel, knowing that you've got to have your money into a structurally significant bank in order to get your deposits covered? This conspiracy theorists are saying that this is totally a way to get all the money into a few big banks so that they can start their digital currency. And geez, it's kind of hard to deny what we're seeing when she makes statements like that. As I mentioned, rate hike odds, 39% of no basis No hike, 61% of a 25 basis point hike. Day count went from up one to down one. We've been 8 out of 9 days below the 80 MA, 9 days below the 21. Expectations back to negative, breaking below the NASDAQ 100, or breaking below the 200-day moving average, although the NASDAQ 100 is fine. Um, Here's the action into today. We undercut several times. Let's go to the S&P 500 on a 5-minute chart here so I can show you 5 times. So here we are breaking that 39.40 area. We held early and bounced, and then we broke it right here at 10:20, and then 1, 2, 3 attempts to get back above it. 39.32, 39.31, 39.30, 39.29. 4 attempts to get back above it on the 5-minute chart here. Couldn't do it. This is a new level, 39.30-ish of resistance. We closed at 39.17. So uh, that 3 times failure is not good. I mentioned last night in the video, if we broke it, we needed to pretty much get right back above it. We couldn't. Um, so score one for the Bears in that case. Bitcoin, gold and silver stocks, and bond prices, the only things that were up today. The dollar bond yields 11 out of 11 sectors down, led by solars, banks, basic materials, industrials, financials, and real estate. XLK barely down, definitely showing relative strength. Here's our focus list, which is basically what we owned as we added gold today. The changes to the portfolio, we added a hedge when we broke the 200-day moving average with SDS, and we trimmed some UPRO when we couldn't get back above the 200-day moving average later in the day. And then we also bought gold on that really nice weekly breakout, dropping our exposure from 0.73 to 0.54. The equivalent of being all in the S&P 500 is a 1.0. So basically a little more than half the risk of the S&P 500. Bottom line, banking system fears continue. S&P back below the 200-day moving average, although the NASDAQ 100 remains strong. So let's get into the 21 over 21 list now. I'll quickly go through what was dropped from last week. The junk bond short just didn't seem to be appropriate in here because it's acting as the same as a hedge. Also, SRPT, a biotech. I may just not even look at biotechs anymore. It's very clearly the deep end of the pool. This is one that had a beautiful breakout on some news, and then the exact opposite of the news from 2.5 weeks ago came out and took it down by 18% from a stock that was acting fine. We at least would always limit our biotechs to ones that had earnings and sales, which this one's, or sales at least, which this one does, and is slated to make over $5 in 2024. But no, out of the blue, down 18%. Sarepta Therapeutics, say goodbye to that. STNG, Scorpio, tankers breaking below the 21 very clearly. STM, I cut 2 semiconductors because I added AMD, which is extremely strong. This one hanging right on the 21, not really showing the relative strength of some of the other ones. I dropped this, and I also dropped LSCC as AMD was added. Again, nothing really wrong with this. There's just stronger semiconductors. And TMDX, which we still own a 1% of, playing ping pong around the 21 EMA, but not showing any significant strength. So the ones that we added will start off at the top here. These are inverse order of how long they've been on the list, and they've got a flag on if they're in the portfolio. ON. I want to keep an eye on this. It's forming a nice cup and handle, new product, earnings late next week. Let's see the reaction to earnings. Obviously won't be buying it before that, but it's got a nice setup. PagerDuty, big gap up, second day higher high after earnings despite weakness in the market. Blue ball meaning relative strength at a new high. Want to keep an eye on this one. That's a nice long cup and handle. BJ's holding up okay since its gap up closed at the low of the range, but that's really the market more than anything else. But holding the 21 day as we go through it, and we wanted to get some retail in there as we were lacking. We want this to be a diversified list, not have 21 semiconductors in here, which we very easily could. Wing, 5 straight up days in a tough market. Got to pay attention to that. Another one that had a gap up, but it failed after earnings. But again, that's mostly due to the market. Things aren't going anywhere in this market, but we still want to hold on or keep our eye on stocks that have very high relative strength and great price action. Gold, I mentioned how we added this today on the high volume breakout. Look at those volume bars over the last 6 days. Very clearly the fear trade kicking in for gold. And now these were all, no, AMD, this was also added. Beautiful breakout from this flat base. And they've got a new chip that came out. So they've got the N factor, nice earnings, great looking chart in this market. So those were 6 new stocks that were added. These 15 are carryovers from last week. Meta, starting with its earnings gap up, formed a nice little tight base, tried to break out, pulled back a little bit today. CDNS, great looking chart. Another one that gapped up on earnings and now is forming a little cup since then. GE Healthcare continues to be strong since it came out. Very rare that IPOs do this, but this wasn't a real IPO. It was a spinoff from GE. OKTA, this is can be interchanged with FTNT as the second leading stock in the software security group. They basically look identical. AXON forming a flag after its earnings. Shift4 Payments forming a flag after its earnings. Does that sound familiar? Lantheus, gap up on its earnings, put in the flag, attempted breakout, pulled back, big upgrade, bounced at the 21, made a higher high. Good action there. Mercado Libre seems to just be going sideways, but still a big stock. I might maybe have replaced this with CRM, but I stuck with this one for now. First Solar continues to pull back, bounced at the 21 today. Palo Alto, this is the one that we own, relative strength at a new high, gets the nod slightly above Fortinet and Okta, but certainly looks good. Tried to break out today, but you see the reversal. ANET, strongest stock in the market. We own a piece of it. We sold some into strength yesterday as it's over 3 ATR extended from the 21 day. Look at the volume bars there. A pullback to the ADMA, and we'll be adding to this one. ALGM hanging around the 21. NVIDIA with a nice breakout today, post-earnings breakout. This and ANET are the 2 strongest stocks in the market. ACLS just going sideways after this big shakeout a couple of weeks ago. And finally, GE has been on here for weeks. Big gap up when they updated on an analyst day. Nice pullback to the 21 where it bounced. This continues to look great. And that's your 21 over 21 list. And with that, I am going to wrap up the week. Remember, it's not how much you make in the market, it's how much of that you can keep. You're interested in our approach, reach out, Don at revereasset.com, or my partner Dan Stewart, Dan at revereasset.com, or you can phone us at 855-REAL-WEALTH. That's 855-732-5932. So wrapping up the week ending, St. Patty's Day, week ending March 17th. This is Don Vandenbord telling it like it is. Just the facts here at Revere, just the market facts. Facts leaders. The truth isn't always good. We do know we've been in this market for 15 months now. We know every day that passes, we get closer to the next bull market where we can compound some nice gains with the capital we preserved. Thanks for listening and have a great weekend.